All right, all right, all right. Sorry, we are a couple of minutes late. I actually had to reboot my computer of all things. So we are 2 or 3 minutes late. But we got to do the daily financial news. And I want to ask one question. Was a recession the goal the whole time? Again, as we've talked about, I think a lot the last month or so, the United States government has somewhere between $6 and $9 trillion in debt that needs to be refinanced over the next 6 to 9 months. This debt refied at 5%, frankly, would have been a problem. At Friday's close at 4%, still a problem, just not as big a problem. One has to start to think, was a recession the whole goal? Conspiracy theory, maybe, but was a trade war the goal? I don't know if you guys saw this on Friday. China was really the first country to come out swinging and implemented a retaliatory tariff of 34%. Thus far, we've seen China retaliate. We've seen plenty of countries, such as the EU, say they are going to evaluate options. We've seen a few countries, like I believe Vietnam and I believe India, say they're going to negotiate. I don't know. I've been doing a lot of research. Watched another video with Scott Bessent the other day, and I want to repeat something that Scott Bessent said and see what you think. Just see if this analogy makes sense. The economy, specifically the U.S. economy, is like a bodybuilder taking steroids. They look great on the outside, but you are killing your vital organs. Goes on to say the easy option would be to continue taking steroids. The hard choice is to get off steroids. So I don't know about you. What do you think? Do you think the U.S. economy has been goosed on steroids? Is it time to get off? Is there another option? Interesting. The other thing that Scott said, I've seen quoted a bunch, really makes me think. And this is the following. The top 10% of Americans own 88% of equities. The next 40% own 12% of equities. So the top 50, 10 plus 40, the top 50 own 100% of equities. What do the bottom 50% have? The bottom 50% have debt. The bottom 50% have debt. The bottom 50% have been hurt the most by inflation. The bottom 50% really can't continue at the rate they are going. So is this just a big, grand master plan, genius move to, I think, like Chamath Palihapitiya said 6 weeks ago, take from the rich and give to the poor? I don't know. How many trillions of dollars were wiped out in the stock market on Thursday and Friday? How much money did the Richie Rich lose on Thursday and Friday? And shoot, if you believe Jim Cramer, I don't know if this is really what Jim wanted to put out there, but Jim Cramer saying if we don't get some positive move on tariffs, some negotiation, some wins, 1987 Black Monday could happen. Now, let's be very clear. That is technically impossible. I don't know if you remember Black Monday or have done any research, but on Black Monday, the stocks went down 22%. Given our features in the stock market adapted after Black Monday, that will not happen. You will have triggers and the market will shut down. I think it shuts down at 10%. Actually, I should have researched this. I think it's like 10, 12, and 15%. There are these things called circuit breakers. So no, we will not see a 22% drop on Monday. Given the system and the rules in place, that is impossible. Now, could it happen over a week? Sure. Over 5 trading days? Sure. In fact, we saw a 10% drop on Thursday and Friday. So again, it is interesting to think about. I don't know if any of you out there listening to this were at Deal Champs over the weekend. Shout out Stratton, Dean, and Jason. They put on a great event. I talked about in the opening presentation that I thought 2025 was going to be the year of the investor. I believe 2025 is the year of the investor. We ignore the noise. We understand that in points of chaos is where great deals can be made. There are plenty of people running around with their heads cut off, reacting to every news headline, and frankly, they're not doing the work. They're not staying attuned to their buy box. They're not writing disrespectful offers. They're not following up. Your job doesn't change. Just because the headlines have gone wackier than any time that I can remember, doesn't mean your job changes. Your job is to take care of you and your family. One of my lessons I shared at Deal Champs when I talked about the pandemic was nobody is coming to save you. No one is coming to save you. It is your job to make your decisions. Stay rational when everybody is freaking out. I am not telling you to buy. Let me be very clear. I am not telling you to buy. I am telling you to do the work, figure out what average deals are, write great deals, follow up, get seller credits, get buy downs, do whatever you can to find that motivated seller and create a win-win transaction. I'm excited by what is coming. In fact, last week, I think we put it out there, I'm changing my investment strategy. For the longest time, probably 18 months, me and the three amigos and Anna and all these people asked, what am I doing? Well, frankly, I was getting lazy. My goal was to repeat what I wrote in my first book, One Rental at a Time. I was simply going to wait for Class B and Class C multifamily to break. Frankly, I thought it would have broken already. It has not. Extend and pretend is winning. So I was willing to wait till 2026 because I thought rates would be higher. Remember my call of 7% mortgage rates, which I have already backed off. I've already said it was a mistake. Mea culpa. I've already said that was a bad call. But once I changed that call, I had to reevaluate my investing decisions. No longer am I going to wait for multifamily B and C to collapse because shoot, extend and pretend might work. If the Fed or if the government can get rates low enough, at some low rate, these stupid prices that people paid will make sense. They'll refi, they'll get out, they'll sell, they'll do something. So I had to change my strategy. So one of the things that I am doing is working with all the great lenders that are on this channel. And I might be going out and doing what's called a portfolio loan across multiple assets and potentially a lot of assets, raising significant dry powder. And I'm going to go shopping while everybody else is running around with their head cut off. My old strategy was very much focused on multifamily. This new strategy will be focused on buying assets that are deeply discounted that I can hold forever. It might be a house, might be apartments, might be an office building if I see a way to make it work. So in the first strategy, I was very much laser focused, B, C, multifamily. As we keep going down this rate and we perhaps get to a 4 handle on a portfolio loan, I'll just take what the market's giving me and go from there. So again, be rational. Don't change what you're doing. Write disrespectful offers. Know that demand is crashing. Know that supply is increasing, which means motivated sellers will get increasingly easy to find. So what else do we got? We got a lot of stuff that came out Friday. We got U.S. payrolls better than expected. We had 228,000 created in the month of March. It was expected to be 117,000. Even with that robust growth in jobs, the unemployment rate did go up from 4.1 to 4.2, still remarkably low. We did get some revisions for all those folks that say we only got revisions under Biden. Sorry, these guys just aren't good at their jobs. You got revisions under Trump. January down 14,000. February down 34,000. One of the things that I do not think is being talked about on the news media, but I think all of us should think about. I believe there is a more than decent chance that the brand America is taking a hit. Now, what does that look like? Brand America means that if you are a multinational company, let's pick on banks because banks report next week. Let's talk JP Morgan, Citigroup, Bank of America, the Wells Fargo, all those big banks. And I'm not picking on anyone in particular. I'm just trying to give you insight into what I'm thinking. Let's say you are in Europe and you are in Asia and you want to take out a loan. You want to deposit some money. You want to create a banking relationship. I would argue that maybe 6 months ago, you might very likely go to an American-based bank, get your foothold in relationship, all of that. My sneaky suspicion is since these tariffs were announced, that a lot of folks that are looking to get loans, deposit money in foreign countries, will purposefully not go to an American company. Now, if this happens in mass, because brand America has taken a hit, you're going to see companies with multinational talk about demand falling. And again, we have some earnings that start, I believe, late next week, might be the week after. We are going to hear all these companies talk about tariffs. We're going to hear about all these companies taking down earnings, and this bloodbath could continue. I think that is something significant to think about. Because again, right, you're in Europe and you could go to Bank Paribas or whatever these other European banks, UBS, whatever. Why go to an American company? If you think America is doing something dirty, why would you go there? My answer is I don't think they will. So we'll have to see about that. Remember, folks, at 8 o'clock or in about 14 minutes, I will be going live in school. There is a link on the calendar. 8 a.m. Just so you know, I'll be going live next Sunday as well. I'm trying to spend more time in school. I want all of you to be able to ask me questions. I want to show value to the school community. So I'll be going live today and next Sunday at 8 a.m. So if you ever wanted to ask me questions, you want to get some free education, you want to be around 350 other folks, simply join school. In fact, we had a couple of people join school in the last 48 hours. I want to congratulate Caleb and Udi. Caleb and Udi, hope to see you guys there. Hope to bring your questions, and I will be talking to you in a few minutes. We do have some exciting economic news next week. Starts on Monday. Consumer credit. Consumer credit is expected to have fallen from 18 billion to 15.5 billion. We will get one Fed speech. Tuesday and Wednesday each have one Fed speech. Thursday's a big day. We get CPI, and CPI is expected to crash. I mean, seriously, crash. It is expected to go from 2.8 to 2.5. That is a pretty significant move. In addition, we are expected to see core drop from 3.1 to 3. Will these numbers showing inflation is falling be enough to get a Fed rate cut in May? I believe if CPI does fall to 3.5 from 2.8, you are going to hear the news media go crazy trying to get the Fed to cut. On Thursday, you also get 4 Fed speeches. Friday, we get PPI, the second of 3 inflation readings. Also, we get consumer sentiment, what is going on with consumers, and finally 2 Fed speeches. Something else, I don't know if you guys have saw. Remember, right after Trump was inaugurated, I said one of Trump's goals is to bring oil down. Well, oil was down big time on Friday. Last time I saw it was $61. Cheaper oil is good for the economy. Cheaper oil allows gas prices and pretty much everything to be cheaper. Let's check anything else I want to highlight here. Oh, one last thing before we wrap up and we get ready to talk to our school community. Actually, 2 things. The market now is expecting 5 rate cuts. 5 rate cuts this year. 5. Last week, I think on Wednesday, it was 2. It's now 5. And then finally, we'll close out with Jeremy Siegel. Jeremy Siegel said, tariffs are the biggest policy error in 95 years. He's obviously referring to the Smoot-Hawley Act with that call of 95 years ago. I don't know. What do you guys think? Do you think tariffs are the largest, or the, what do you call it, the biggest policy error in 95 years? Or is Trump just trying to reorder the economy and, you know, go through a detox, be that bodybuilder that gets off the steroids? I don't know. But again, folks, remember what your job is. Your job is to focus, do the work, write disrespectful offers, follow up, and make moves that will benefit your family. All righty, folks, take care of yourself. Have a wonderful day. It was a great time at Deal Champs. I think I saw about 40 folks who watched the daily financial news. So if you were there and you said hi, took a picture, thank you. I appreciate you. I love doing all of this. Also, since we're here, don't forget about Dion being the keynote speaker at Bigger Pockets in Vegas. I think it's in October. Don't forget about one of the boys going on the big stage. We could always show him some love and support as well. Take care. Have fun. Later.